Nifty and Sensex trade in the green after a positive Trump-Modi call ahead of the FOMC decision tonight, and the Commerce Ministry saying that India and the United States held positive negotiations yesterday. Energy, industrials and IT gain, while metals and utilities drag.
The urban company stock races up after listing at a hefty 58% premium to its offer price of 103, implying a market capitalization of over 23,000 crores. The strong show points to big investor appetite for top B2C platforms.
Larsen and Toubro writes to the Union Housing and Urban Affairs Minister seeking to exit the Hyderabad Metro SPV by selling its 90% stake to the centre or Telangana. Infra major sites mounting losses and lack of support from Telangana government.
In a boost to commodity exchanges, SEBI chairman has said the regulator will permit banks, pension funds and foreign investors to trade in non-agri commodities.
US President Donald Trump calls friend PM Modi to wish him a happy birthday and thank him for his support on ending the Ukraine war. Modi replies, thanking Trump, and commits to take the India-US partnership to new heights, signaling a big thaw in relations.
Hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Mangalam Malu this afternoon. Well, it's turning out to be a session where the market is seeing steady gains. And if you look at it, it is obviously the hopes on the US-India thaw which is aiding sentiment. And that seems to be probably one of the key factors which has played out over the past couple of weeks and not only today. So case in point would be month to date, the Nifty is up around 3.68%. The mid-cap index is up around 5.7%. And obviously, we do have the GST rationalization, which is also added to the mix. So we have the Nifty Auto Index, the BSE Capital Goods Index, both of these indices, which have been the top rankers in terms of performance this month. So up around 9% odd. Separately, we do have the Fed meet outcome, which is awaited today. So that will be something that the street will watch out for. And obviously, what happens with regards to the India-US progress when it comes to negotiations on the tariff front. Hi, Mangalam.
Hi, Ekta. It's been a good start to trade. It's been actually a good last 10-12 days to trade. So let's see whether it continues to move higher or not as we move towards 25,500, which will be important psychological resistance for the Nifty, the psychological level for the Nifty from here on. And we'll watch out for whether it's led by Nifty Bank, Nifty IT, or both of them together. Today's trading session tells you that there is a risk on. We are seeing the public sector indices do extremely well. So PSU banks come up for you, and the PSE, the CPSE index also comes up for you. All of them spiking in today's trading session. Your portfolios, even though the mid-cap index at an absolute level is not as high as the frontline indices, the Nifty as well as the Nifty Bank, the small cap index is doing a lot better. And we do have, the advanced decline ratio, which is 1,800 stocks in the green for about 1,000 stocks in the red, telling you all the portfolios are feeling a lot stronger in today's session. But for a lot of the stocks that are buzzing around, let's go across to Vivek, who is standing by the wall. Vivek.
Well, thank you so much for that. Advanced decline ratio, strong, like you mentioned, especially in the broader end of the markets. Like you mentioned, over the last 10-12 trading sessions, we're actually seeing significant momentum and slightly higher volumes compared to what we were seeing earlier. Quite a few stocks on the radar. Well, the first stock on the radar has to be MCX, especially in the last half hour or so, given the fact that comments are coming in saying FPIs may be allowed to trade in non-agri commodities. Now, some clarification is required whether they will be allowed in gold and silver. Now, if that happens, it is seen as an important trigger as far as MCX is concerned, almost 5% higher for the stock, and it's spiked up just in the last half hour. Defense companies, the entire pack today is doing very well in the session. Names like BEL, Garden Reach, Premier Explosives, Idea Forge, all of these stocks amongst the top gainers today. Mahindra Life, some positive news flow coming in. Another MOU has been signed by the company to go ahead and redevelop some properties in Chembur. The company says almost 1,700 crore top-line opportunity from this particular redevelopment that the company is planning to undertake. ABFRL, a new brand launch is what the company has done. Street is cheering that, almost 4.5% higher. And IRM Energy, one stock we don't discuss too often. It's the CGD, smaller name from the Cadilla Group. That particular stock higher by 18% on very good volumes today. On the other hand, quite a few laggards as well. Look at Britannia, amongst the top laggards today. Top NSE 500 laggard. In fact, select hospital stocks, both Max as well as Fortis, today under a bit of pressure. Telecom stocks, both Idea as well as Indus, are seeing a bit of profit booking. And Gujarat Gujarat Fluoro came in focus after the block deal. It has recovered significantly, but despite that, trading with a bit of cuts today.
All right, Vivek, thanks a lot for that. We'll take a short break, come back on the other side, more markets, and we'll also connect with Abhinav Chaturvedi, who's the partner at Accel, as they sold shares worth 390 crores in the urban company offer for sale, the IPO that came by. They're sitting on a fair amount of stake in the company now as well. So what's the way ahead? We'll speak with the investors who made a cool 27x on urban company. That's been the big story of the day. This is our special segment, Fundraise. Stay with us. You're watching us here on this special segment on CNBC-TV18 Fundraise, and there has been a serious amount of fundraising, and thereafter, making a fair amount of money on urban company as well. That's been the stock of the day, the listing of the day, where we've seen a big jump. One of the sellers in that offer for sale was Accel. Sold shares worth about 390 crores, still hold about 7.5% stake in the company. So the person who led that round of the initial investment has joined us from Accel. Thanks a lot for joining in. The obvious question, back when you were speaking to urban company, what was the pitch that made you feel like, okay, this is something that we can go all out in? And at the same time, how did you watch the company as it grew along? What were the major pivot points according to you? And now that it's listed, what are the next triggers?
Well, firstly, very excited to be here. It's an important milestone for a company which we invested in at a very early stage. In fact, when we invested, there was no registered company also. So
3.7 rupees, and now it's 170 rupees.
so it was very, very early, and it was just 3 founders and a pitch deck. So it was that early. And, when back in 2015, we were doing our prepared thesis about this space, trying to figure out where the opportunity lies. There were 20 plus companies in the space. Oh. And what we found between these 3 founders was clarity of thought. And they were also, in that stage, trying to move to a mobile native experience. And, all the other competitors at that time were more web focused. And if you remember, 10 years ago, there was this transition of Indian economy moving from the web first to the mobile. And that piqued our interest, and that's why we decided. Of course, the team stood out, and, that has continued for the last 10 years.
Okay. Interestingly, what's happened to those 19 companies?
Well, you know what? If you see it, there is very little competition for urban companies.
Yes, absolutely. But so is that, I just wanted to understand, what is the kind of competition you would see going forward for an urban company? Because everyone is now caught up onto this particular model. So what is the growth path? What is the kind of competitive dynamics that you would see for an urban company? And what are they going to bring to the table henceforth? Where's the innovation?
Yeah, I think that's a great question. And for any new investor coming in, the main question is, where is the growth going to come from? Yeah. If I see competition, the competition is largely in the unorganized sector. And these small mom and pop stores trying to provide service what urban company does. And therefore, the whole thesis behind urban companies has been the shift from unorganized to the organized world. And so that's the main thing. And today, we don't see any large organized player competing with urban company. There are new incumbents that are trying to come in certain categories, which urban company plays in. But by and large, it's a tough business, and that means that this requires a certain acumen from the founding team and the management to execute against it and deliver against it. And so I see the challenge more in terms of unorganized moving to organized rather than any other organized player in the market.
Right. And, obviously, the listed companies are looked at more from a different lens than the private companies. Obviously, you are looking at some of the fundamentals, the unit economics, etc. But when you're in the public universe, your cash flow from operations matter a lot more. Your profitability metrics matter a lot more than just growth at the cost of profitability. Now that you're looking at the company being listed, you have a good chunk in the company right now as well. What in your conversation has led to their path to profitability? What are your internal estimates here?
Yeah, I wouldn't be able to share the internal estimates on the public television, but what we have seen over the years is there's a clear operating leverage playing out. And for the last 3 years, the cost base has been largely fixed, and you see as the revenue grows, it just translates into the profitability in the company. I see that coming in going forward as well. I also believe that there is such a growth path ahead of the company that they should not compromise growth because of profitability. And so we'll see a fine balance between growth and profitability over time. There are also important levers of growth. So for instance, the core business can definitely keep growing at a decent clip. There are new pockets of opportunity in terms of the native business, which is the hardware product business, consumer product business. There are new interesting services categories like Insta Health, which they have launched recently. And so there's the core business which continues to grow at an interesting clip, and there are new opportunities that are going at much faster pace than the core business.
Okay. In terms of the 7% that you all do hold, the remaining 7%, what's the outlook on that? Do you have any kind of outlook in terms of when you all would look to monetize the stake buy?
Yeah. So we take these decisions, on a periodic basis. We had to sell at the IPO because the company is profitable and there's only so much primary that the company can take. But we want to keep the 7% for as long as we can.
So
as long as you can. So are there any metrics that you are tracking? How long is the fund life before you're compelled to sell it?
Yes, and so there is obviously those constraints when you run a fund, and typically the fund life is 13 years for us. And but we'll see sort of how it goes, and so we are 10 years into the fund, so there's clearly a 3-year window at least for us, and then we can take some exemptions as well.
Have you made any kind of returns as you have in Urban Company in any other investment, or has this been the best performing investment that you all have made?
See, at Accel, we've been investing since 2008 in India. And so we were the first investors in some of the best known consumer companies in the country, like Flipkart, Swiggy, Urban Company, in software side, Freshworks. So we've been
comparatively.
So we've been fortunate to partner with many of the great companies that have come out of India, and this is of course right at among the top of the list.
What is the average MOIC been? I'm sorry to use this PE term, multiple of invested capital. What is the average for the fund?
Let me put it like this: that when we invest in early stage businesses, the multiples you make are obviously pretty handsome. But what we also get is a real partnership with these founders and association with these founders that help us build out these companies over a long period of time, and also figure out a way to invest in the next generation of companies that typically come from founders who have worked in some of these companies.
Are you a little unhappy that they priced the IPO at 103 rupees when the street was looking for so much more? You could have obviously gotten a little more bang than what you already got at 27 times.
I think we feel it was rightly priced for the IPO. The management has always been of the view that they want to leave money on the table for the investors who come in. And I know in the short term we are seeing a great run today. I think the more important thing is how this works out in the long term, and I feel very confident about the long term.
Just give us a sense in terms of the kind of investments that Accel is now looking for. When it comes to the entire startup scenario, are you looking for companies which are now looking to innovate and not just do generic, run-of-the-mill business models in India? Is that something that Accel is probably looking at more closely? And are Indian companies actually going down that road? And if you could elaborate a little bit.
No, absolutely. And it's not, I know this theme is pretty important these days, but you see, there is innovation in Urban Company as well. There is no other company in the world which has done what Urban Company has done. And so there is innovation at every step of the way. In fact, some of our Indian companies, made Swiggy, call it Flipkart, call it Urban Company, these, if you look at the transaction volumes in these businesses, this would be among the largest in the world. So there's innovation in terms of actually delivering value in that stipulated time, when you say you'll deliver stuff in 30 minutes or something. So there's real innovation there. It has not been done anywhere else in the world. Of course, I get that. Should we do more deep tech, and should we do more robotics, and should we do AI and stuff? And so there is obviously a lot in our portfolio which is not visible right now, because anything of importance takes 7 to 10 years to come to fruition. Right. And so we have new areas of focus which are deep tech, robotics, AI, and I think over time you will start seeing some of those companies play out. But these things take time, and we need to give them time to to come to actually.
So in that case, could you give us a sense in the very near future, what are the IPOs from your stable which are likely, from your portfolio?
Yeah.
And at the same time, what are some of those companies that you're talking about 7, 8, 10 years, which you're betting on with a lot more conviction now?
For sure. So we've had 4 IPOs, Swiggy, Blackbuck, Bluestone, and Urban Company in the last 10 months. There are 3 more companies that have filed DRHP right now. So there is Cure Foods, there's Amagi, and there's Captain Fresh. Right. So I would say that they are imminent in the short term. And then there are a bunch others which are in the pipeline to file for their DRHP and getting ready to go public. So we feel very confident and proud about our portfolio performing well. In terms of our early stage investments that perhaps the world will know about in 5 to 7 years from now, we recently invested in this quantum computing company called Axel Quant, which is into the field of quantum computing. We are invested in a robotics company called Posha that helps you make your food automated way, and so you don't have to touch it and it just cooks the food. So there are very interesting companies that are coming out of our portfolio, and as and when they scale, the world will get to know about it.
Okay. All right, Abhinav, it's been a pleasure. Thank you very much for joining in and speaking with us, and congratulations on the big gains that you'll have made in Urban Company. And obviously, they've left enough in terms of...
so when they offered their shares, it was at 27 times. I know he'll not talk about numbers, but he's led the round. And now, on day one itself, it's 45 times. So the 3 years window that he has, let's see where he exits.
I'm glad we hold 7.5% still. So.
Enough left on the
table for shareholders and them as well, their partners. All right, Abhinav, thank you so much for joining in. We'll take a short break, come back, get you more on the markets and a lot of individual stocks that we are tracking today. Maybe some trading strategies as well. Pritesh Mehta of Yes Securities joins in. Stay with us.
Welcome back. Well, let's get talking about the F&O space. Mangalam is at the big wall to tell us what he's tracking this afternoon in the futures and options segment. Mangalam, over to you.
Well, the market's moved higher, so that's a positive. We have the Nifty, which is being led by twin engines, which is that of Nifty IT as well as the Nifty Bank. So all of that explains why we're still holding above that 25,300 mark, closer to the higher end of today's trading range so far. But importantly, in the broader markets as well, there is risk-on sentiment. Why do I say that? Because you have the PSU banks doing well, the public sector index itself is doing well, and even as the mid-cap index is not moving as much as the frontline indices, the small-cap index is up 0.75%, much higher than the other frontline indices as well. And that's reflecting in the advanced decline as well. We have close to around 1,800 stocks which are in the green for about 1,000 stocks which are in the red. And those lines have maintained their distance all through today's trading session so far. Now, where does the market go after an 11-day run? Depends on important technical levels. The Nifty IT reclaimed its 50-day moving average in yesterday's session. The next important level is about 300 points from here, 36,795. So we'll watch out for that, the 100-day moving average. For the Nifty Bank, it's crossed past important levels, closed above 55,000 yesterday as well. So 55,600 to 55,650 is where the next level of technical congestion is. So it has to cross that. The pathway has been cleared until 55,600 to 55,650. On the Nifty, there is support which has moved higher. 25,300 put has a premium of almost 60 rupees, telling you that around 25,250 to 25,200 is important support for the frontline index now, after having seen a rally. But at the same time, on the way up now, because it's seen a rally, we're watching out for some sort of psychological congestion or supply coming around 25,500. Remember, the Nifty is already put behind itself a near 850 point rally. A more 150 points from here would make it a 1,000-point rally. So 25,500 is a mark that I'm watching out for. The put-call ratio has moved to 1.19. It's been at the higher range itself. Whether it sustains here or not is something we'll be watching out for. A lot of stocks seeing long positions being added in just the last hour or so. Tata Chemicals is fairly well bid. IEX is another one where the open interest spike has been fairly high on the long side. And Mazagon Dock. All these defense, rail and public sector names are doing well. So Mazagon Dock is the other one which has been seeing some long positions being added.
Okay, all right, Manglam. Thanks very much for that. So that's from the F&O desk at CNBC-TV18. But Pritesh Mehta joins in to discuss the technicals of the market. Pritesh, hi, afternoon. Well, for the markets, it's showing steady gains on a month-to-date basis. We've managed to creep up and, the Nifty is now comfortable above these 25,300 odd levels. What's your sense in terms of where we go from here?
See, I think last few weeks, we had a period of market being in sideways mode. Now things have changed. Things have changed now because our customized top 10 Nifty index has reversed from support zone. Top 10 Nifty equal weight index has been moving higher. This is the verge of surpassing the previous peak. And finally, Bank Nifty has participated. This was a big laggard in the last 1 month. Now it's showing some steam, some leadership. So I think things are in motion now. We can say that from here we can see more strength coming in markets. We are betting on 25,700 as far as Nifty is concerned.
All right, and individual stocks, what are you betting on, Pritesh? Because a lot of these stocks are seeing some big moves. We have MCX, which is higher. CDSL is the other one. Kalyan Jewellers is about 5% off lows, currently at the high point of trade. So there are sectors and then there are individual stocks. So a lot of them are buzzing.
So yes. So the last couple of weeks when Bank Nifty was not doing anything, Nifty was sideways. Apart from auto, we had strength in broader markets. So I think this space was doing quite well. Even right now, if you look at the ratio of small cap versus Nifty, mid cap versus Nifty, it is moving higher. This is a good thing to observe. So that it tells us that the breadth of the broader markets is improving. It is gaining momentum also. So one stock that we like from this space is by M&M Fin. It is coming off a 8-month long base. Now we can see bullish at a breakout on pointer figure chart. And target we're expecting is around 320. The stop would be around 265. Second stock that we like is Grasim. Now this stock is trading around the peak of June 2024. Sustenance about the same would mean a shift in orbit on the upside. So it is already witnessing follow through to bullish anchor column. So buy for the target of 3,200. The stop would be 2,790.
Okay, all right. Any specific call on a couple of these auto stocks as well as cement stocks in today's trade?
So I think autos were the big outperformer for last 1 month or so. So we have seen pockets of strength coming, something like TVS Motors, M&M. But one stock that we like, which has not participated the way others have done, is Ashok Leyland. This stock, is witnessing follow through a bullish anchor column and now trying to provide an ABC breakout. It isn't confirmed yet, but it's showing signs to do that. So I think a move towards 150, 155 is possible in Ashok Leyland.
Okay, all right, Pritesh, we're going to let you go on that note. Thanks very much for joining in and speaking with us. Well, we need to take a short break, but up next we have an interesting conversation with Nitij Mangal of Jefferies India. He's written notes on the IT and the auto space. So we'll be discussing that in depth on the other side. Stay tuned. Welcome back. Well, steady for the markets. We have the mid-cap index, which is lagging a little bit, so just about higher by around 0.2% as compared to the Nifty, which is showing much better gains today. But let's talk about or deep dive into a certain number of sectors, IT and auto to be specific. We have with us Nitij Mangal, who's the auto and metal analyst of Jefferies India, now joining in to discuss a couple of his reports which he's penned. Nitij, hi, welcome to the show. Well, one of the topics that I wanted to start with is your interesting report on data centers, where you expect the market to grow by around 5x by 2030. And the key beneficiaries would be the likes of Bharti, Reliance and Adani Enterprises. Just take us through the crux of this report and what is it based on?
Hi, thank you, Ekta. Thanks for having me on the show. So on the AI side, we do think it's a pivotal moment for India. And while, yes, there are some concerns around how does job creation happens, especially on the services side, we do think there is a lot of opportunity on the data center where we think the market on the leasing side can go up 5x in about 5 years. So the telecom companies, we believe, are quite well positioned to realize this opportunity. There will be opportunities in the companies that will be providers to the data centers as well. And we can't discuss specific names, but this is, in our view, a very big opportunity for the Indian corporate space.
The published, report has said that there would be names like Bharti, Reliance, and Adani, which would form nearly 35 to 40% of India's data center capacity. But apart from, the ones who own capacity, would there be any ancillary plays to the data center? Maybe the ones who construct it, some sort of wiring companies, real estate companies who are building these data centers, etc. For everyone, third-party names. Could there be any other ancillary opportunities here as well?
Yeah, of course. So we do think there is an opportunity for companies in electricals, power, cooling system, etc. So the reality is that a lot of the server and the compute opportunity will be captured by companies which are more on the semiconductors and hardware side, where a lot of content comes from outside of India. But a lot of facility-based capex that will get captured by the ancillary companies.
And if you could, maybe not specifically name a few in particular, but, randomly give a list for people to reckon with. And these are not recommendations. The disclosure's up and clear for the viewers.
See, Mangalam, as you know, we will not be able to take company-specific names. But one can think of companies which are pretty prominent in the space of, again, like electrical power distribution, cooling systems, etc. We have covered quite a bit of those in the report, but I'll not be able to take any specific names on media, I'm sorry.
Okay, sure. The other, aspect that you all are looking at is the impact of AI on large-size IT companies. What do you think is going to probably pan out in the next couple of quarters or maybe 1 to 2 fiscals when it comes to AI? And how are you then placing yourself when it comes to IT? Do you prefer the mid-sized, smaller companies then?
So maybe let's talk about next couple of years rather than quarters. We do think AI is going to create revenue deflation. Our broad thought process is that the existing IT revenue streams will see almost like a 20% deflation over the next 3 years. But yes, that also gets offset by new business creation. So overall, there is growth, but it is a slower growth than what we have seen, let's say, over the last 10 years. And then companies that are preferred are maybe more the mid-sized companies or maybe companies which are more nimble in adopting to this opportunity. But the revenue deflation and the implications of that on valuations are going to be a concern for the IT sector from here.
So when you say slower growth, what are you anticipating or what are your projections in terms of growth as compared to, say, the previous decade?
So what our firm expects is about a 3.5–4% revenue CAGR over the next 3 years for the sector as a whole, compared to about 7–8% CAGR that we have seen over the last 10 years on the revenues.
All right. So half of the growth is what you're expecting. Speak about a couple of these auto names now, because, the big belief is post-GST rationalization, there would be, ahead of the festive season, a big, boost coming in, at least at the entry level and mid-level demands. High level, obviously, is unperturbed in any case. So what are your thoughts out here? And after the run-up that we've seen in a lot of these names, do you think there are ones that still offer value? In what particular segments would they be?
Sure. So auto is one space we are extremely positive on. So we're getting this big GST cut. There's already an income tax cut boost that is coming. So there is a meaningful tailwind on affordability. And that is also happening after a relatively subdued period on demand over the last year and a half, both on passenger vehicle and the two-wheeler side. So we do believe that the GST cut is going to provide that big boost. It's happening at a very opportune time with festive around the corner. Between different segments, we believe two-wheelers is going to be a faster growing segment over the next 2 to 3 years. And it's primarily because two-wheelers have not seen the full cyclical recovery post the COVID. So let's say when I think of from the pre-COVID levels, two-wheelers are still lower on volumes. And that provides a very benign base for a very strong growth from here. So on relative basis, we expect two-wheelers to grow the fastest over the next 2 to 3 years, followed by tractors and passenger vehicles, followed by trucks.
Okay, so would that be your pecking order in terms of the auto sector as well? Two-wheelers are your top choice in terms of the stocks. I know you can't talk specific stocks, but in terms of the subsectors in the auto space, how does it stack up?
From a growth perspective, we do like two-wheelers the most. But having said that, when we think of our overall investment thesis framework, we generally want to own companies which are, let's say, at the intersection of demand as well as franchise. And so we do like some two-wheelers, we do like some four-wheelers. So it's a mixed set, but from a growth perspective, we do think two-wheelers are the best placed.
All right. And what about the plays here as well? There is increasing software composition on the autos. So you'd probably play names like Hexaware and KPIT, etc., or maybe play it via the hardware itself and not the software?
So again, no company-specific names, but I mean, generally speaking, when I think of a big demand in the auto industry, so generally the entire ecosystem benefits. Well, the OEM benefiting, the component makers benefiting, but yeah, no specific names.
Okay. All right, Nitij, it's been a pleasure. Thanks very much for joining in and speaking with us and giving us your perspective in terms of two big sectors, that is IT as well as the data center, which we could probably see growth, 5x growth is what they're predicting, and also autos, and they prefer two-wheelers in that space. We'll do one thing, we'll take a short break, but up next, Manisha Gupta will join in to go through the commodity space with us. Stay tuned.
Welcome back. Joining us now is Abhineet Buchra. He's co-founder Sangeeta Buchra Jaipur. Abhineet, hi, good to have you. You are a manufacturer, wholesaler, retailer when it comes to silver. With the way the silver prices have moved, how would you look at the various businesses that you hold right now in sense of demand?
Hi, good afternoon. Well, I expect silver prices in India to trend upwards moderately. Okay. At the moment, into and through the festive season as we are approaching, possibly hitting around 1,35,000 to 1,45,000 per kg or even more. But if global trends and rupee weakness supports it, but there's a risk demand might plateau or drop if prices get too steep or if consumers substitute gold or defer purchases. So it all depends on that. So my outlook for silver at the moment is upwards, and it looks good.
Has it impacted demand in any sense? Because various reports that I'm going through, Abhineet, show us that it may have impacted perhaps the articles demand. But when it comes to bars, coins, investment demand, jewelry for that matter continues to be quite strong.
Jewelry is very strong right now. I don't see any drop in demand because the price is increasing, so as the customer's intention to buy is increasing because they feel that it's a safer haven to buy, and their investment will increase with time. So I feel it's going to go up, and there are various factors attached to it, like prices in India keep rising somewhat into festival season. Usually 10 to 20% we have seen in the past that, always it increases. And there are various factors like solar demand is there. Then the rupee to dollar is it's dropping sharply, and imports have been increasing. This year already we are looking at around 5,500 to 6,000 tons, and possibly more if the demand increases. Then industrial demand globally has increased in electronics and various other things. The use of AI and for the infrastructure of that, it requires that. So I feel there is no shift. Bars demand and coins, everything. It's I think it's the highest right now. The sales are very, very good, and I don't see a downside at the moment.
All right, Abhineet, as compared to last year, we are up by nearly 48% in sense of prices. While the value obviously automatically goes higher, how are you looking at the volumes for the last quarter of this year, the festival season, that is last Diwali versus this Diwali?
See, I am looking at an increase of approximately, in volumes, at least 20 to 25%.
Even with these
Already we
prices?
have- Yeah. Prices are not an issue at all. People are not looking at the prices right now. They are buying at any price. So we have lately, conducted various trade shows, visited and met a lot of clients. The overall demand is very high, and the only thing which is important right now is the prices to stabilize. This is what the client looks at. If the prices vary between 130 to 140 or 145, but it stabilizes there, then the overall demand increases. It brings back the confidence among the investors and the customers.
Sure.
And this is the price, and the price has to stay. So if there is a lot of fluctuation, then it becomes a problem.
Yeah.
In
Abhineet,
terms
when we look at festival and the wedding season upcoming, where is it that you see demand coming from? Is it going to be Diwali gifting? Is it going to be festival buying? Is it going to be wedding season demand? What category are you looking at demand coming from?
So demand, particularly in jewelry, when we talk about, it's coming from articles, coins, bars, and leg jewelry. Then gifting is another segment which is very high in terms of when it comes to festival purchases. And weddings post Diwali, the wedding season will kick in. So, the demand then comes in from that. So I would first put like articles and bars first, and then leg jewelry, and then the gifting. So it would go like this.
All right, Abhineet, thank you so much for joining in. So clearly strong demand as it continues in case of silver. We do understand that there are a lot of standalone silver showrooms, more silver shelf in showrooms is what we really seem to be looking at. So while gold demand may have seen a decline, it's not the case for silver for sure. But with that, we go for a short break. We'll get you more on the markets and stocks on the other side.
Welcome back. A couple of these consumption names picking pace. We have Trent, which has moved to the high point of trade right now. Alongside that, we have Varun Beverages as well, which is spiking up around 2.5%. Remember, post the GST announcements that did come by, the management joined us and said that they stand to benefit from the non-carbonated part of their portfolio, the GST coming down from 18% to 5%. So that's positive for them. And we also saw some pickup in names like United Spirits. So that stock is also at the higher end of today's trading range. The management sounding fairly confident out there as well. But speaking about management commentary, we had the CNBC-TV18 Banking Transformation Summit, where we spoke with PNB's CEO and MD Ashok Chandra, who spoke on the new CEO of PNB Housing and the housing segment on the whole for growth. Listen in.
See, first of all, I will make it clear that the person will not be from Punjab National Bank. It is totally the professional driven things are happening now. And that is the reason you have seen that advertisement has happened in the public domain and applications have been sought by the PNB HFL. And it is totally dependent upon the NRC and the search committee and finally the interview panel of the PNB HFL. They are going to decide. And I am expecting that another 2 to 3 weeks, definitely, I will also be expecting some good news.
You did speak about how the disposable income would rise, bringing a fillip as far as the overall demand itself is concerned. Help us understand the impact of this thing on Punjab National Bank with respect to your credit growth in the next 2 quarters. What kind of changes do you see coming through that right before the festive season?
Yeah, the retail segment I am expecting, if I can drill down further, the housing segment I'm expecting that around 14 to 15% growth will happen YOY. The vehicle segment, I'm very bullish about it because drastic rate cuts have happened in the input cost also and the rate cut also in the vehicle. I think I'm expecting in the range of around 22 to 23% YOY growth in the vehicle loan segment. MSME, I am very bullish about it. A lot of initiative bank has taken, and the digital piece which has been brought in the credit underwriting, I am very hopeful that MSME piece will grow at a speed of around 18 to 19% YOY.
Oh, that's quite a bullish guidance that you've presented to us. I want to ask you about one particular statement that you made. That was about a large recovery in the month of July. Help us understand about that. What was the quantum of that recovery, that large recovery that you were expecting? And has it already happened or can we expect it to happen soon?
No, that has already been factored. Around 900 crore is the upgradation that has happened in one of the legacy account, and definitely in this quarter, with the help of that, we are going to see good performance as far as the recovery is concerned in the PNB.
All right, so that was the management of PNB speaking about growth in the housing sector, but more importantly, management leadership change coming back in PNB Housing, assuring the street that it won't be an internal and external candidate has been summoned, or invites for external candidates have been summoned. With that, we'll take a short break and take your leave on this edition of Halftime Report. But stay tuned to CNBC-TV18. Business Lunch takes all the market action forward. And mind you, there is a lot happening. The Nifty is 5 points away from hitting that century.